Hello and welcome to Pro Trader Strategies Market Commentary for Unenjoyment Friday, November the 2nd. Yes, Unenjoyment Friday is the Unemployment Friday, first Friday of the month. But let me get a couple of things out of the way real quick. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that I talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with the economic data. Across the pond, we did get some PMI numbers out of the European region in line with expectations for the most part across the board. French, German, and the broader European area in line with expectations. You could even say Italian manufacturing PMI was pretty in line with expectations, just slightly lower in Spanish as well. So on to the United States. We've got our own non-farm payrolls, employment change. That's the unemployment number, the non-farm payrolls that we really look at. 250,000 expected to be 194,000, knocking it out of the park by about 56,000. Last month's number, though, it was revised down from 136,000 to 118,000, so about a 16,000 drop from the original number. Take that away from the headline number, it's still a good beat. Unemployment rate came in line with expectations at 3.7%, and average hourly earnings in line with expectations at 0.2% increase. Factory orders, on the other hand, came in was expected to be 0.5%, came in at 0.7%. So factory orders starting to ramp up. That's good, right? That's forward looking as a good indicator, forward-looking indicator there. All right, so on to crude oil inventories, pretty much unchanged, maybe down 50 cents on the day, but testing the 23.6 Fibonacci level. I talked about this. I think it's going to support there, and we get a bounce back closer to the point of control where the most time and volume has been spent. Somewhere in between 60, in that 60 handle, whether it's 60 and 1 penny all the way up to 69.99. That is where I think that the market is going to want to stay, at least for the foreseeable future. Maybe next week on Wednesday when we get some crude oil inventory numbers, we might get a better indicator. But at this point, I think we're got our bottom, and we should bounce a little bit from here. Maybe at least test the 38 Fibonacci, but I think we'll probably go back to the point of control. All right, moving on to gold futures. They are off just a little bit. I would expect with the equities, the way they're starting to slide, this might get a little momentum to the upside in gold futures. It's outside of the value area. I think that we could easily see it start to build up some of this right around here at around the 1250 mark. Then on to bonds. They're off quite a bit today, almost a point, full point right now. That's with the equities making a charge right off the open, but have since started to slide. So we can take a look at the VIX. It's starting to move higher after getting out of that 20 handle earlier today and yesterday. But now we're back into that 20 handle. The reason why is, like I mentioned, equity is starting to slide as we speak. So here's the chart of the Dow Jones Industrial Average, down 123 points. It was positive probably 123 points earlier this morning when it was testing the value area high and the 38 Fibonacci extension. We're starting to fail from that. This could be a rollover right back to the point of control, which is what I'm kind of been talking about for the past couple of days. Similar situation here in the NASDAQ, off 117 points. Obviously, the leader in terms of percentage values down in NASDAQ, but it's right back to the point of control, you guys. This is what I talked about. It's going to want to bounce back and forth. We could easily see it coming back down and maybe next week test this 67 to 87 area, take a bounce, just like what I'm talking about with the crude oil futures. And again, E-mini S&Ps broke out, busted through the 200-day moving average, at least tested it. It looked like it was going to bust through it. It kind of peeled into it and then started falling. As you can see, we are on the lows of the day, but right back to the point of control, which is not really a bad thing, to be quite honest. And then, especially on a really light volume, we talked about this European holiday today, bank holiday, so it should be light volumes. And we've got the NASDAQ down about 20, or sorry, the E-mini S&P is down about 20 points. And you can see on the daily chart with 30-minute candles that we are on the lows of the day. Now, one thing I thought we were going to have this slow melt up in the equities today, and Apple gave me a nice spike, but I started chasing this thing and missed it. I'll buy Apple at these levels. 205 is where I'm at. And I went into the November that expired today and sold the November 205 puts in there for $1.08, and tried to buy those back this morning for about 26 cents. I started out at 17 cents. They actually traded that low, I think, and then started chasing it as the market really started falling out of bed here. I missed my opportunity at this point. I'm working a 26 bid to get out of those. 60 in the Apple, I'm working a 19-cent bid. Right now it's trading 41 is the market. But I chased it all the way to 30-something and then brought it back. So Apple was a trade for the earnings, and I'm out of the money right now. And with it expiring today, later on, we should see that theta really start to kick in on these Apple 205 puts. So I'm going to hold on to those for right now. And if I have to buy Apple at 205, so be it. I'll get mechanical and start selling calls against it. And that's it for today. I've got a couple other working orders. They're well away from the market right now. It's just with the way that the E-mini S&Ps and the rest of the broader market is setting up today with this chart pattern, I want to get out of some of my long deltas. I was expecting a little bit more of a bounce here, but that being said, I need to cover some of my long deltas if we start getting a bit of a correction going on here. So I've got some working orders just in case we get a late day spike or something like that. I don't really expect those to get filled, but I am going to stay on top of it, especially with Apple. And that's about it for today. Check out yesterday's webinar. It was on the long iron condor, and you need to check that one out. Actually, condor. The other one's butterfly, iron condor. Check that one out because there are very few occasions where we would really want to implement this strategy, but I go through that when and where the timing is appropriate for something like this. You really need the right setup in the right environment in order to be successful with the long iron condor. So check it out. Go to protraderstrategies.com, and that's about it. Other than have a great weekend, and if you can't take that, take it easy.